Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, September 10th, 2025. I want to give a shout out to my niece, Emma. Happy birthday, 21 years old. I can't believe it. And let's get started. So, I was pretty much chasing my tail today, and it really had to do with the position that I had open overnight because I was expecting that we were going to get some PPI numbers and we are going to dip down and then shoot up. But obviously, we had a massive gap higher, and from there, it actually the trade setups were really good because one, we gapped to new highs, so we knew that the gap to new all time highs fade trade was in effect. But so I took it, and then when we started going up, I started doubting that we were going to actually we were going to come back down. But I took the 654 puts on the spiders. I mentioned that in the room, and then the 653 is what I did was when we were right about here. So we came up, and then I was a little gun shy because one is we didn't really have any bearish divergences on the 5 minute chart. So I was kind of anticipating that we were going to come down and up again. So I was definitely a little gun shy on it, but of course, here's your gap fill. That this remains 100%. After the original move up, we chopped around, and this is the interesting part is that you can see this is the GEX numbers here. So these are where the dealers have a lot of exposure, and we came pretty close to this level here to 60 the 650 what was it, 655, and from there we just sold down and came pretty close to where the bottom, the put support was. So that was at 650. We made it down to 650 64. So that's why I was a little kind of upset with myself with the trading part because we had a decent entry with it, and it was more a I just chickened out with it. So we took a 653 put call thing that made money. It made about $800 for the room on it. The actual fund we did a little bit less than that, 690. I had to do some scrambling because of the position that I took on yesterday. So let's move on where we are. So we know that let's just go back to this. And if we're going to come up, we obviously have the resistance going to be at the 655 level, and if we move above it, and we can see 660 is the next resistance for the spiders. So if the bulls can get above the 655, and it's not in a gap fashion where we gap above it, because then we'd be coming down and looking for the gap to get filled like it did today. But if it grinds higher and gets above it and then does a back test, and this is accepted by the market, then we're really looking at the S&P heading to the 660 level. So I'm kind of open-minded for tomorrow because this was quite bearish. I mean, besides the first, say, 2 hours of trading or hour and a half of trading, it was really but nothing but selling. So I want to see how things open up. If they don't like the CPI numbers tomorrow, what I we can just do a simple ABC move and see if it coordinates with any of our Fib retracements. So we'll use this as the low, and you can see this pretty much came right there. But I'm going to actually remove that and take it from here and say, all right, here's our low. If this was the high, we're looking at a move coming down to the 64.97 on the S&P. So let's take a look if that matches up with some Fib numbers. And if we just take a look at the 5 minute chart, now this is from Friday when we had that big drop to the high that we made today. So you can see 64.99 is a 50% retracement, which matches up with the ABC move. So if we open up down tomorrow, I'd be keeping an eye on the say the 6,500 level. If it goes below it, this would be the buy zone, the 64.86, 64.67. And then from there, we seek, because this is really going to be our line in the sand. It's going to be the 64.33. If that gets taken out, then we're probably going to be taking out or coming down and at least testing the 64.15. But right now, the bulls are in control. We had this big sell off. They're back to new highs again. So it's definitely, I think, with the Fed talking next week, I think they're going to be buying the bids on it. So I really wouldn't be too anxious. The Bears made it. I meant the Bulls made it through. We were supposed to Monday and today was the bearish days that we had, and we, it didn't play out. So again, as I've said, these are dates that we watched. They're not huge trade things. I made a trade off of it yesterday. Got stung, but traded our way around it. And for tomorrow, we don't. Well, let's look at it a little bit. So the 5 minute chart, you can see we have a little bit of a bullish divergence. We landed at the 100-day moving average here, and buyers stepped in. So if they continue higher, what we want to keep an eye on, if they can get above this 65.55, we're going to eye this 6600. That's going to be it's an ABC target. And if you remember, I'm actually going to go to the S&P. Hang on one. Okay, so if they get above it, you can see we have a GEX number that's at 675, and then above that, we're at 6,600. So that actually matches up with what we're looking at as far as an ABC move. So this would be the upside target if we're going to head higher. The Bulls obviously are going to have to get it above this 65.75, which I'll put a line right here. So it's right here. If they get above that, then we're just assuming they're going to make it up to the 6,600. Now, if they gap above here, if they gap up here, again, we're going to look to fade it because most likely we're going to come down and close this gap, just like we've done on every single time that we've done it. And that's why that pattern remains at 100% accuracy. So downside, if the bears can get through the lows that they did today or the 6,500, then we're going to be looking at a move coming down to the 64.87. And if we keep an eye on things here and see where the downside pivots are, 64.50 is the next GEX number down here. So if these lows are taken out, there's a chance that we're going to come down to the 64.50. It doesn't mean it has to be done in one day, but it's something that we do want to keep an eye on. So upside, again, what we need to figure out is if the Bulls can get above it, we're going to watch the 65.75, above that 6,600. If the Bears can get through the lows today, then we're looking at a move coming somewhere down into the 64.67 is the 78% retracement, and that's just really from. I'm sorry, this is yeah, from there, but I actually would rather do it because this is an hourly chart. So if we keep 64.57 would be the 50% retracement. So that would be the area that we'd be looking to buy. Would be if we do get weakness that carries on, it would be right around this 64.57 level. You can see it's price support, fib support, and then we also have the GEX support right here. So that would be the downside part of it. On the upside, I just showed you 65.75 and then 6,600. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.